Oh, it is recording. I have a million questions already. Perfect. And we're gonna go through them. Prepare them. And one thing that I've realized for now is a lot of people that ask questions for me sometimes it's difficult to understand because they use words, terms that they think are public knowledge, but terms, especially in the trading space, are used very differently. It's the same for us when I use words when in describing the course or describing concepts or the market. It's very individual and very different. So best always is to underlie it with screenshots. Yes, a lot of them are ICT terms. I think I don't know all of them, but from the point I realized when I ask something about a special word, um, then most of the time the explanation is ICT stuff. So if you have questions, I don't know how we're gonna do it exactly. So good morning, good morning. The number's not rising, so I think everybody should be here. Otherwise, it's gonna be a recording, and we're also thinking about doing a second one until Christmas, and then there are gonna be, of course, a couple of live sessions starting mid of January. For those of you that don't know, why do we start mid of January when we would start yet second half of December, most of the time slowing down at the markets because fund managers, companies also go on vacation. There's Christmas time, there's New Year's Eve, there's less liquidity, higher volatility, or sometimes no volatility, depending if Trump starts tweeting again. Um, but the reason why we start mid of January is just because there is the most value when we start there, because then there's going to be a couple of months of continuous action without big breaks in between, and you had some time to go through the course, because not every customer has the time to buy the course and then just instantly go through all of it. So, can I lift Andrea? Let me see. Andrea isn't here. I think I can lift you. I'm not that experienced with Zoom. I should be able. Or I feel like a boomer. Like,
Okay, here we are.
perfect. I feel like 40 years old in an environment or a teacher trying to
Awesome. Welcome,
use.
guys. Welcome, everyone. I can't see a lot. Can you put me as a co-host? Is there a chance you can do that?
Yes, I think so.
Okay,
Uh,
awesome. Here I am.
Fine.
I don't have a camera with me today, guys, unfortunately, but here we are.
Is the voice from the back.
Let me
Big
just check.
brother's big
Can you
brother's watching.
can you hear me properly?
Yeah, yeah. Sound quality is good for me. Ciao, Timmy.
Awesome. Okay, guys. So let's start with the questions. I would say I can't see any question right now in the Q&A session. There's a Q&A session right below. If you have any question regarding anything you've seen in the course, anything you've seen regarding the strategies, the implementation, if there's any specific you want Jonathan to go through, this is your chance to do that for the next hour-ish we have together.
Yes.
So yeah. How is the course overall? Are you guys having a good experience with the course? Is there any topic you would like to go in depth with today? Feel free to give us some feedback. We can't hear you, Andrea. You can't speak. This is not a free for all live session. If you're supposed to send the questions here below, write them down, and we're going to go through them.
No. FNA, it's called FNA because I think it's a German license, or maybe on your license on your
It's supposed to
displays
be
it's
a
Q&A.
yeah.
Yeah. Okay, so I think there is. May I ask if the market profile is set? Antworten echt. So, let's start from the top. Complete new to order flow in your way of trading. I used to trade retail patterns. Thanks for introducing more aspects. One request is to give us an overview of the volumetric platforms that you use. I would ask you to teach the whole platform as it's. I wouldn't ask to teach the whole platform as it's not the idea of the course, but I would be better if we can understand the benefits of having the platforms, how precise the data would be, and if we're switching to the platform from TradingView, if we can see it in person. So a lot of questions always are about the software. I think in the whole trading space, I understand it because in the beginning, most people think that you need to copy the setup exactly the same to master the strategy. And in our logic, it is not true. Search in our, like in the case of the team, Search is using Atas. I'm using TradingView. I used Sierra Chart before that, but as I'm switching more to the company side, long-term trading and fund management, there's no real use case for order flow day trading because the ticket sizes are going to be too big to day trade them. So for me, TradingView is enough. So I switched to TradingView. Tom is using Sierra Chart, and Patrick's also using Sierra Chart and sometimes NinjaTrader. So all the things that we do are implementable in all of the software. But those are the softwares that we use in Germany. It does not mean that you need to choose one of those softwares. There are a lot of softwares. I think in the Italian market, a lot of you guys already suggested Volumetrica. Andrea, maybe you can
Yeah, regarding that, we're
talk a little bit
planning.
about that.
Yes, we're currently creating and working with this Italian software company to basically create an English optimized version of the software, which is going to be called Deep Charts. We're going to present it also to you guys in the community if you guys are interested. And we're going to make specific tutorials and specific templates on how to use the TTT's framework inside of it. So we want to make things easier for you guys. In the meantime, I think it's best if we use the time we have together to discuss everything related to understanding the strategy and the concepts rather than making a webinar dedicated to the platform. So regarding the platform, let's, if you are willing to use one more platform rather than the other, it's all up to you. Maybe if you can, let's say, wait within the next month, we can make you maybe a live session on Deep Charts when it's ready. But for now, I think there's a huge amount of tutorials and material you can find online or with the trading platform itself. Usually their websites have all the tutorials necessary. But yeah, I would say let's start diving into the question. I'm not sure I'm seeing all of the questions. I think I just see a fraction of them.
Like 11 open in the Q&A section from my side. Do you see them? Do you now see like the question on the screen?
I see.
I asked if the market profile is set to daily or only for cash hours.
Yes.
Can you see this question? Because
Yeah, I can see those questions. Yeah.
Okay. So may I ask if the market profile is set to daily or only for cash hours? If you trade highly liquid assets like the S&P 500, like the Nasdaq, like the Euro future, or in general the big six currency futures, also gold markets, silver markets, or bonds, we set it to cash hours. You can still use and analyze the same way of 24-hour profile because depends on the way. The thing that changes most in that case is the opening price because you're gonna have the open in the profile of the cash hour and not of the 24-hour profile. But in a 24-hour profile, although most of the future markets or in general the markets have a gap at some point where the markets are closed for 30 minutes, 1 hour, or 2 hours, or 4 hours. But the open is most of the time with a 24-hour, and it's not 24-hour because the market's closed at some time, but for the most time span that is available as data, the open's not gonna differ or most of the time does not have a big difference to the closing price. So the value of validating or using the opening price as part of the context structure or analysis where we think the market will go is less. So because the opening price is there where the closing price is. The logic between or behind the opening and the closing price. It's just that when big market participants or companies step into the game, they need liquidity. And at some point, they check if there's liquidity, if there's a lot of interest to act at some point. And there is a lot, or you see in most of the markets, you see a volume spike when the main exchange where the product is traded is opening. They have opening hours. Of course, you can trade it pre-market and you can trade it post-market, but the biggest volume spikes most of the times are when the market officially opens, so in the cash hours. Sometimes when there is a war going on, when Trump's tweeting, when there's a special event, of course the volume in the pre-market is higher. So you can also then take into account of the pre-market, but there is no fixed rule then when the volume is 25% higher than to the cash open in the pre-market, or the volume in the pre-market session is 25% higher than in the average of the last 5 pre-market sessions. We don't have a rule like that. It's more we put it into context, and most of the markets you see when there are going to be big moves pre-market, because most of the time the moves pre-market are kind of slow compared to the cash session. Then we just use the normal cash session profiles. But the strategy and the approach works with both, because the opening price is one part of the puzzle, and it's not strategy is profitable or not if you have the opening price or not. It's just part of the puzzle. And the same is for the value areas. When you check the volume profile and you have the value areas, and you take a 24-hour profile or you take a cash profile, yes, they're gonna be a difference. But in some cases, the 24-hour profile is gonna be better. In some cases, the cash profile is gonna be better. The basic setting for us is always the cash profile. But in the end, in the long run, there are gonna be small differences. But sometimes A is better, sometimes B is better. In the long run, they're gonna average out. But for us, because also the data quality and the data efficiency throughout the different platforms and the cash session is the best, because the spikes, especially in candlestick charts, also if you trade CFDs and so on, the liquidity is the highest during the cash sessions. So the quality of the how equal the data is on different sources is the highest during cash session. That's why we mainly focus on that. I think and hope that answers questions answered.
Yeah, I think it does. So I'm reading a little bit about the feedback. There's people I like the course a lot. The course is really good. There's a lot of it's very concise. Love the information. Some others ask instead for more example, and they
we
are
will
looking
implement some more examples.
Yes. Yeah. Michael is specifically looking forward to the more guidance that will come on January with the live sessions. Yes, the practical side of things will start in half January, because we wanted you to have first all the information that you need to implement, and then during the live sessions, see it implemented live, basically. So that's the goal for January's live session. We want to give all the people the time to watch the course thoroughly before we do the 2 months of live session. They ask specifically, for example, if you can open a chart, Jonathan, and give more examples regarding the business zones. And they are asking how Serge is tracking the business zones and drawing them. Is there something we can tap into?
I think it's going to be difficult, because in this set, all of the people are going to be inside, and the business zone is not part of all the program. So
Okay,
I think
so
we cannot step deep into the explanation of how business zones work, are created, how we analyze them, or how we create them.
Okay, so I think we can save this for next week if we're going to do a Q&A session specifically for everyone in the premium mentorship. For now, if what would you guys think regarding the volume profile? Because that's something we can definitely tap into with everyone. Is that clear? Is there something which is not clear about the setups that you've seen in the course regarding the volume profile? Then if you have any other question, you can read them out yourself.
Yeah, 20 more open questions. So just studied Chimie, as you say, yesterday. In macros, very important to see on chart patterns to understand visually what happens on the markets. Big true. I don't understand the question.
I'm not sure. Not sure what he's referring to. There's another question. Are we able to trade CFDs,
Yes.
but
Are you
do analysis in the
taking
future
the questions
market?
from the chat or from the Q&A mode?
From the
Q&A.
Q&A. Q&A. Adjusting price quotes for the selected market. This topic is not entirely clear for me. So everything you need to know regarding CFDs versus futures quotations. So the quotations, like the numbers are going to be slightly different. You just need to watch price. So you just, you know what? I think I'm going to just share the screen and make a very easy example real quick so you guys can understand. Let me just open up the charts real quick. I should be able to share it. Yes. Okay, now you should be able to see the screen, correct? Can you see the screen, Jonathan?
Yeah.
Awesome. So, for example, this is the ES, the S&P E-mini contract. Let's take the December expiration. And for example, I can put, let's say, this on top, US 500, which is the CFDs of this. And as you can see, prices are going to be different. The current price is, well, there's a delay also in the futures. But for example, let's take this as an example. This candle, this 4-hour candle. Let's put 4 hours here as well. Unless we already are 4 hours. Okay, we already are 4 hours. As you can see, you just need to translate the prices.
Market structure of CFDs are going to be the same, but the spikes and the extremes of the wicks that you can see are sometimes going to be higher, sometimes going to be lower.
Especially
during the absolute price is going to be different.
Exactly. So both the number and I would say also the long-term structure is normally pretty similar, except some slight different. The more also you go lower in the time frame, the more you're going to be able to see differences. But structure being the same, it should be pretty easy for you to translate from Forex to futures with whichever market you're currently analyzing. What do you mean by cash?
And maybe also explain the reason why that is. So in the future, you have a higher margin, and in the future, you're doing a contract or you're signing a contract for something in the future. So there's going to be some credit. So you borrow kind of money. And that difference of interest rate and the difference between the CFD and the future is going to be how high is the interest rate, how high is going to be the interest rate until the point where the future contract settles. That's the reason for the difference between the future contract and the CFD.
Definitely. And that's also the reason why different future contracts of the same asset has different prices. For example, you can have ES contract, which is priced at 6083 for the expiration of December 2024, but December 2025 is most likely going to have a higher quotation because we're trading on the future, literally the future price of S&P 500. What do you mean by cash session? Cash session is simply the session. It's supposed to be explained in the course, I think, but the cash session is nothing else than the session with the biggest amount of volume, specifically for American markets, when the CME is opening at 3:30 Europe time.
Yes. For example, you have an open in Frankfurt. So there's a Frankfurt open, but it's not that big. The biggest one is the London open. So the open of the London Stock Exchange, then you have the New York open. And you also will have Tokyo open, but it's not necessary. We don't check for Tokyo open because at some point I'm going to sleep. But as you can see in the volume profile on the bottom, there are main traded volume sessions.
Yes, the main trading volume session is what we define as the cash session. This is the opening auction, this is the closing auction, and the rest is like agent session, London session, pre-market. When you see low volume, it's pre-market. So this is what we define as ETH, so external trading hour. External, and this is regular, so RTH.
I think it's called extended.
But extended, right?
Yeah, it's extended. And the reason why there is a big volume spike, for example, at the end of the trading session, because at some point, brokers, big banks, the broker that offers you the CFD contract, they're not executing every CFD on the real markets. First, they decide if they want to execute you. They put you in the A book or in the B book. And at the end of the day, a lot of banks or brokers settle at one price. So they say, okay, we now today had 100 contracts bought, we had 90 contracts sold. So we're just going to settle 10 contracts because they have less cost. And that's the reason, and a lot of that happens at the end of a session, because a lot of market participants agree on, we need liquidity to settle that. We want to settle with low cost, low commission, high liquidity. So they settle at the end of a session. And it's also a historical reason why it established that way, because 50 years ago, the internet was not as common as today. So market participants needed to agree on a time span where they traded on the physical pit, and that was not 24/7. Although we're going to go into a direction where 24/7 is going to get more commonly used and more established. And I think we will go there because markets will be more efficient with 24 hours of trading. But for now, it is not that way. But those are the logics behind it. Maybe you understand it. So I think that's answered.
Yes.
As a beginner, I was wondering if you can go through volume profile patterns, D, P, and B, and executions. Thank you. We went through those in course, but of course we can take some more examples. Let me try to share the screen. View. You should be able to see my trading view. It's kind of a small monitor now because I'm in a new setup I first need to install, but you can take any markets. Let's take the DAX for today. We have profiles. So the way I set up it, or I have set up my trading view, the way I use it, it's not the same search user. It's not for day trading, it's more for the swing trading purpose, but I have like the different markets. As you can see here, I have the bubble, I have gold, I have stocks, I have the FDAX, here is NASDAQ, S&P, oil, and so on. But you can take any profile, but for me, when I do the big picture analysis, I go to a higher time frame, and then the profiles usually pop up, and then when I go to the 1 hour time frame, there should be a okay, internet's kind of slow. Perfect. That's the biggest downside for TradingView. Either it's my internet or it is.
I think you can simply just switch, and then it should work.
Yeah, the profiles are preloads in the currency space. So what are the setups that we have? So we have different structures, and in a B structure, you always want to check for trades at the value areas, extremes, or at the POCs when you have a pullback. And when you trade in this example of you take the profile of yesterday, and where do you check for trades? Just extend the value area high, extend the value area low, and those are at first your first areas of interest. First, you want to trade a range, but it's kind of a very small range in this case. And if we are above, we're checking for longs at the value area high, checking for continuation trades, at least until there is last interest from the past, and you can see there is a signal print in this area, and there's a volume area low, so we expect kind of a rejection here. That's it. Those are the first areas of interest. If we are above here, we're looking for longs. If we break into this area, for example, if we touch the POC, the VPOC of this profile, because it has not been tested yet, then the likelihood of this high volume area is being accepted is going to be high. So for now, we could check to exit our trade here, because there's the next high volume area. But if we test the POC, then we're going to check for longs in this area. Then we check for longs until where is the next area of interest? It's up here. And that way we trade the zones. So in this case, we had a very It's from yesterday. It's Canadian dollar. So this profile is already traded through. Most likely there has been some central bank news. When I see this candle, it looks like central bank news. So where are the areas of interest today? We have a low, we have a high. And if we at 230, most likely volume is gonna step back in. Yes, as you can see, when I diminish the profiles, the way I've chosen the candles, you can also see the volume. I don't like the volume at the bottom because for me it's not that convenient to analyze, but TradingView implemented, I think a couple of months ago, the option that those are the basic candles, and with those candles you can see also the volume traded. So the size of the candle is in relation to the volume. So you also see just with the chart where the volume steps in. So when the candles are small and there's less volume, when the candles are big, there's a big volume. And as you can see, there's average or low volume. Then here in the pre-market session, volume rises. The Americans wake up. It's the future of the Canadian dollar. So it's like the Canadian and US dollar. And is the Canadian dollar strengthening or weakening? Here there is very likely to be some news. And so if we have our profiles, in this case the daily profile. Why is it so slow today? Then we have volume area low, we have a volume area high. It's still loading. We have a volume area low, we have a volume area high, and those are at first our areas of interest. So when we check this, I think now is a 24-hour profile of yesterday. Oh, this is the normal TPO and this is the Sessions TPO. Yes. I'm really sorry, guys. I don't know why it's that slow for now. So if we take the Sessions TPO, we can see in general, we are in a downtrend structure. So our first bias still is to the downside, but we most likely had some news yesterday. Now I would dive, of course, if I would check for trades in this market, check what have been the news yesterday. So economic calendar, but you can choose any what has been yesterday. So we have core inflation and Bank of Canada interest rate decision. So we had an interest rate decision expectation is met, but now it's not just about the expectations, also what they told. Are they gonna lower interest rates in the future more extensive or not? Now I would check with our fundamental analyst what he thinks about that. And then we just have structure. So from a technical perspective, simple technical perspective, we have some news. We just know that there are any news. Like I said, before I opened the economic calendar, I didn't know what there is, but there are news. There was news in the US dollar and in the Canadian dollar central bank. And those fundamental decisions can be turning points because there is new information that is getting priced into the markets. But until that point, I mean, it's clear we are in a downwards trend, and still we are in a downwards trend. But yesterday we kind of had a P profile. So if we check for the cash session of yesterday, you see that the volume area is in the upper area, and we have a P profile. So if there have been shorts, they have been liquidated, or positions have been closed out. And during the news, and at the end of the day, yesterday, so during the news, they closed higher than it opened. So we had an opening session here. So because this is the initial balance, we had the open somewhere here, and we closed higher. So at the end of the day, when big market participants settled the price or tried to settle the price, closing price was higher. The price that they were accepting to pay or sell for was higher than at the beginning of the day. So the influence or impact of this news most likely is higher. And furthermore, we have a P shape. So the volume in this area has been traded on the upper side. The volume in this case also has been traded on the upper side. Could also have been traded further downwards. So we have the first intention of a potential reversal. Value area shifting higher. The POC is higher than the previous day. Value area in general is high, and we have a P structure. We have a tail at the bottom. We have more than 3 TPOs. And we have kind of a weak high. It's not really a weak high because there's just one TPO at the extreme, but it's kind of a weak high. So what do we check for? If we open inside here, we're going to play the range scenario. If we're going to get above this area, we're going to check for longs. And until where is our long interest? There's a naked value area high, so we can check for the first area of interest that is over here. And that's the way we analyze the profiles. And then there are different scenarios. Of course, if we're going to open at 1430 below the value area low, and we show acceptance means we spend time there. It's not just spike where we are below. It means we're spending 10, 15, 20, 30 minutes below this area, and we see that there's active interest in trading. If the market open and it's dead and it is dead and it's not moving, the likelihood of just this range playing out is more extensive. And then we now have a profile analysis. We are in the downtrend. We had a kind of a P shape yesterday. We have a P shape today. Value area is higher, the POC is higher. Close at the end of the day yesterday is in the value area, but it is higher than the opening price. And now we want to wait, where is the open? We have a positive indication. We can even further support this thesis that we now built just from technical perspective. We can support this thesis with analyzing what the Bank of Canada said yesterday, but that's going to be a fundamental part. But you can also just trade it the technical way. It's just a further addition. You could also check for seasonality. You can check for a lot of different confirmations there are to add to the strategy. But from a simple technical perspective, that would be just the way of analysis. But we're going to implement examples like this more. Also in the morning, how do we check the markets? How do we go through the markets? Because we scan in the morning through all of the markets. I just newly moved to Frankfurt, so I still need to establish the routine in the new office and company. Hope that was answered extensively. I think I need to go through the questions a little bit more fast because we have still 27 open questions. But I hope it was answered and provided some value. So course is great, love the information. It's really concise, really unlike anything I've learned before. Yeah, some people complained about the course is not long enough, it's so short, and I was like, yeah, I can do more blah blah in the course, but the question is the value or the knowledge transferred and is it set? I mean, I can record slower and we can extend the hours that you watch, but in my opinion, it's a waste of time. So I feel like someone asked briefly, but can you elaborate more the expected risk to reward and VR win rate for the models? Yeah, it's different, but I think yesterday I already sent a message. It depends on the market phase, liquidity, and the asset you trade. So on assets like the Nasdaq, the risk to reward is going to be way higher, but the minimum risk to reward you should always check for is at least 1.5. So when you trade like bonds, for example, they're highly liquid but slower. Minimum risk to reward should be 1.5. And then the hit rate is going to be something between 25 to 40%. 40% not, it's going to be too high. It's most likely, most of the time, it's going to be in the range, but it depends on, for example, the hit rate. Now, if you continue the second half of December, the hit rate is going to get lower because volatility is lower, market participants will step out of the game. But the hit rate is going to be for the day trading purposes, trading from value area high to value area low and trading the opening variance. It's going to be something around 32 to 38% hit rates. When you then go to swing trading, but the risk to reward, for example, Nasdaq is going to be higher, but the hit rate is going to be lower. If you trade something like more liquid markets like the S&P 500 or government bonds, then the hit rate is going to be higher, but the risk to reward is going to be lower. But you need to, those are the things. I mean, we can give you numbers, we can give you the tests that we did, but then still you're not going to trust the strategy because even if you do or implement the strategy, at some point you need to, the markets you want to trade, you need to test this by yourself. We can provide the numbers. We have Edgewong sheets where everything is inside. We have screenshots of the trades. how we implement it in the journal, how's the risk to reward, how's the hit rate, we have that. But if we just provide and present it, you're either going to use it, but when the strategy is going to perform worse, you're going to mistrust the strategy, you're going to do strategy hopping, you will add in things into the strategy that are not in there. So at some point for the markets you trade, you will need to do and put in the work to do this for yourself, please. So could you give more examples in the future regarding the trading setups that you guys have, volume profile ones, I mean, from the basic ones? What exactly do you mean?
I
Maybe you
think
could
he means
clarify that for us.
to more example regarding the volume profile setups.
Yeah, there will be more examples about this. So, and that I mean by that
I
I mean
think it's
hours.
the continuation of the previous question for swing trading. So the question is, for swing trading, what look back do you use? Do you use 30 days as you mentioned in the video, or you focus on specific swing? And by that I mean
It depends on what you analyze. For example, let me share the screen again. So Bitcoin, everybody's talking about Bitcoin. Not a good sign, by the way. For example, when I analyze Bitcoin, there's no fixed rule. You take a look at the past 20 days. It depends on the time horizon you build your trade idea on. When the trade idea in general is okay, Bitcoin now is in the Trump perspective, and I think under Trump the Bitcoin price will rise, then it's not going to be enough to analyze from October until today, because you want to make a trade or a swing trade or a trade idea for a whole election cycle of 4 years, and then you're going to analyze on the basis of 2 months. So it's going always needs to be in a relation for. I mean, if you trade for or do an analysis for 4 years, you should at least give it 4 years back. I mean, Bitcoin's going to be difficult because you don't really have a lot of volume up there, and the history is kind of limited. But when I want to create a trade idea, for example, that a lot of people give Bitcoin for Christmas, and it really happens, and the statistical likelihood of the Bitcoin rising in the second or in the first half of December and then having a drop in the second half of December, and I want to analyze this, then the 2 months of perspective are enough. So I can just analyze here the previous move. If I have a long idea, I mean, I don't need to check for the prices down here. If I want to enter the market down here, it makes no sense. But if I want to scale in the pullback, I will just give a look or at the previous day. It's difficult to explain because when I want to analyze after COVID that the trading industry and trading stocks or stocks like Booking.com or in general travel stocks will rise again after COVID, and this is a swing trade idea for 6 months, then you should analyze the last 2, 3, 4 years in perspective. When you want to create a swing trade that you think the gold prices now will rise because the Central Bank of China is starting again to buy gold, then you should maybe look at the last 1, 2 months and try to analyze if there's a trend establishing and then hop onto the trend. So it depends on the swing trading has a lot of different times and time horizons, and you need to adapt it to this. 30 days, as you mentioned. For the day trading things that I explained, for example, in the example of the Canadian dollar that we used, we use 50 days, or we use the basic rule of 50 days of back if you have a naked POC, if you have a naked value area. But if it's 40, 50, 60, or 30, again, it's not the reason the strategy is working or not. There just should be at least some time horizon and should be more than 20 days when you check for areas in the past. Check. Andrea, I think you need to check that question that it's I get away again. For me personally, explanation how to set volume profiles. Let me answer. Enough. When to start and when to end. You should include timings for the basic futures and forex pairs, but I only finished series 400. You can think about providing a document with regular trading hours, but you can find them on any exchange, on any product you trade. If you just Google for S&P 500 regular trading hours or cash session, there are there is that information. But yeah, we can. I can ask the team if we can create a Word document and share with the time for the big markets. And for volume profile, how does search build its business zones? We need to be explained more. I understand it can be discretional, but we cannot figure out by ourselves with the course. So the goal for now is that you try to create the business zones by yourself, that you understand the context, and when we do the live sessions, you will be able to compare them with our business zones, at least the elite part, the people that are learning the strategy about the business zones, and then you will be able to compare them. But for now, it is about understanding the concepts and building the setup, and then we will start with this of mid-January, and then you will be able to compare them, and we will provide them daily, the weekly zones and as well as the daily zones. I like the course a lot. Maybe we can go through application for swing trading. Also, future a Sierra chart webinar would be nice. In the past, when we did a Sierra chart webinar for people that learn from us, the following up questions most of the time have been more than until the point that we held that webinar, because Sierra chart is very complex. And I said a couple of times, we're not providing the software here. And if we show you a software, the likelihood of a lot of questions, more questions coming back because there's some problems or we're using some tools and people don't know how to install it's going to be higher. So it's unlikely that we're going to make a Sierra chart webinar, because then also there would be a bias for people to use Sierra chart, and we don't want to tell people use this software. You can use any software. All of them are going to be usable and good for the things that we teach. So all in the course is okay. There is not much that is not explained somewhere else. So for this price, I expect more guidance and interaction on a daily basis, analysis and daily and weekly. As I already said a couple of times, we're going to start with this mid of January. Also, there we're thinking about giving a morning outlook, how we analyze or what do we think about the markets in the morning, and then we do it again on the next day, and then we'll review what have we analyzed and did yesterday and what do we think today about the markets. We will do this. So swing trading part, since most of your setups are based on the market opening. No, they're not. So the trades are not entered on the market opening. Could you show us some setups based on swing trading in the Forex market? The concepts are exactly the same. So the concepts apply for all the markets. If you trade indices, if you trade commodities, if you trade currencies, it does not matter. The setups are the same. And also with the openings, you can also view it on a weekly and monthly basis, but there's not going to be a big difference in that. But also the setups are the same. The setups is PBDs, the setup is business zones. There is no difference on the markets you trade. What are the best times you see trades in volume trading? I keep hearing a lot about the first hour of London and New York timeframes. I prefer trades between 10, 11 a.m. German time and 4 p.m., 4 to 5 p.m. Those are the trades I prefer most in the currency future market, but it's just personal preference. Because for me, then I have like my morning beast mode. So before the market opens, also in the first hour, I can do stuff and finish stuff and just work, and also afterwards. And then I have like in between my trading session where I focus on trades, because when you day trade or also check for swing trades, those are the high volume areas or high volume times. And in those times, I will check for trades. I don't like to trade exactly at the open. But as I said, it's just personal preference. What about the broker? What I would trade with? I'm using Pepperstone with TV. Trade, I don't know, for live accounts, which gives me essential license for free. I mean, any broker is good. It depends on how much commission do you pay, what's the spread that is on the broker, how much costs do you have. People need to understand the lower the costs. So you have a 50-50 chance percent. If you buy or sell any market, you have a 50-50% chance of winning or losing. You just click buy and sell all the time. 50-50. In the long run, you're not going to earn, you're not going to lose. But it's like in roulette, the green zero, the casino wins just one field, and that is the commission with your broker. And that's the odds that are stacked against you if you win or lose. So the lower the commissions, the higher the likelihood of you winning. We use, or I mainly use, interactive brokers. But it depends on the area you live. It depends on what product you want to trade. It depends on the capital you have. Interactive brokers makes no sense for very small amounts, I think. And then there's going to be CFDs, and CFD brokers you have a lot.
Yeah, CFDs brokers
But
you have a
we're
lot.
not.
I can say, for example, you can go to forexbenchmark.com to check out which brokers are the best. Normally, yeah, Pepperstone is one of them. FP Markets is one of them. IC Market used to be one of them. I'm not sure it's available all over Europe. And regarding futures, you can
A couple
depending on
of years ago, I dived or dove deep into the IC markets because I thought also about executing through IC markets. And the thing with those brokers is IC markets, they have a big marketing campaign about how low the spreads and commission is. But when you trade the size above ticket size above, I think 10 or 20K, in the AGBs, there's written that the spread widens in the moment of the execution. You're not able to see it on the screen, but the spread of those brokers are widened. So they say,
yeah,
okay, so 99% of the time we have a spread of blah, blah, blah. But in the time of the execution, no, the spread's wider. And
yeah,
that's
it
with a
can
lot
be.
of
Yeah,
brokers.
yeah, yeah, yeah. It can be also because sometimes it's the spread widening because of the book, because they have their own book of liquidity, but sometimes they just add the spread. It's normal.
Yeah.
From what I've heard, Fabio, for example, uses FP pretty proficiently with a high level of capitalization, and still spreads are fair enough. But do your own research and test. That's the only way. Regarding futures brokers, I would think yes, interactive brokers. AMP also is a great option, commission wise. And yeah, you don't have the problem of the spreads, of course.
Yes, that's the big benefit of futures. So as soon as you can switch to minis or micro futures, I would suggest to do it. The 10th of December, do you consider that opening of the first 30 minutes ES has been inside the previous value area? Questions like this, can you please send them in the Discord? And you can send them any day. Just send your ideas. You can share them in the Discord, and then I will answer to them. But please always share them with a screenshot, because otherwise it's going to be very difficult and time consuming to reconstruct that exact idea, that point that you made. The best thing is always a clear text with a screenshot, and then I will kind of respond to that. About the P shape, for example, can you explain a bit more when you have an uptrend and you decide where you put your support line and resistance, all of the above? What's the decision you take in terms of time frame in the box? There is no 100 fixed process. I will just have a higher time frame. I will mark my areas of interest. So in this case, let's stay with the Canadian dollar. So we have an area of interest here. It's the value area high, it's the value area low, and personally like to minimize my charts. Search, for example, has the profiles there 24/7. You need to find things you like. But for me, I like when the profiles are removed. I now know, or I have in the back of my head, I have a P profile. In general, I have a long context, and then I will hop onto the lower time frames. And then I will check for a beautiful structure. The lowest time frame I would choose is the 1 minute. Below that, for me personally, makes no sense. Why is it so slow? I mean, I hope the connection is stable and it's not my Wi-Fi and I'm speaking like a robot because the internet connection is too bad. And then I'm just going to lower time frames and checking for strategies, for setups that we teach, PVD setups, for example. So, and here you now can see the markets or the chart already starts to get kind of illiquid. You have a lot of gaps, not enough liquidity. Let's switch to the DAX. The DAX should have liquidity already. So go to a lower time frame. So this is our profile of yesterday. One area of interest, another area of interest. I think a lot of people think, or it's just my thought, people think that the strategy is more complex than it really is. It's just, this is my area of interest. Whatever the profile structures look like. It's just annoying. Really sorry about that. And oh, by the way, I forgot the chat. So if you're sending in the chat, I will need to go through it later. I just have the Q&A open. So we have a clear uptrend. I think we don't need to discuss.
See the screen currently.
Okay. That is valuable feedback. So we have a clear uptrend. I think we don't need to discuss about that. Then we had a P structure in this case. We have kind of a P structure in this case, and here we now continue the range. We have a strong close yesterday, so we have a first indication of strength. We have a balance here. We have a tail at the bottom. We have kind of a tail at the top, but it is at the end of the session, so the close very high. We still have a kind of strong profile, and liquidity and trend and end of year rally is kind of high. So those are our areas of interest. And now I will go to lower time frames and check for a setup. So as long as we are above here and we don't go inside, I will check for longs. So as you can see, overnight session, kind of gaps, a lot of jumps, less liquidity. Here you can see Frankfurt open, liquidity steps in, we have less gaps. So the volume rises. You will also see this when you switch to those candles, or you can just implement. I think for the beginning, it's gonna be more easy if we add the volume. Yeah, so you can see as well as in the size of the candles, but also at the bottom, Frankfurt open, pre-market starts, volume steps in, but the big volume comes with London. So the volume steps in, and at this point, we can check for trades. So if there is already our long bias, and we now can add. So in general, we have a long bias. We are in an uptrend. We had a strong close yesterday. We have our areas of interest with those lines. Those are the value areas of yesterday. You can also see add the profile to the chart. I just don't prefer and like it. We furthermore have a weak high, kind of a weak high. It's not that we have two TPOs at one level, but it's still not a strong rejection on the top. So likely that we're going to take this out again. We had a strong impulse at the openings to the upside. So big institutions that stepped into the market in the first minutes of the market had a big interest to buy. Does not matter why and how, we just see on the technical perspective they want to buy. So for now, as long as we don't accumulate and spend time below here, we have a long context. So what do we check for? Long setups. So we go to a lower time frame when we want to day trade. 5 minutes is the first time frame we can check for. Otherwise, we can go to lower time frames. But when we stay with the 5 minute, we can go for a P. That's one of the first areas of interest. 5 minute area of interest. And how is the first trade idea, or could be the first trade idea? We just broke out with the open. We had a P shape. We had an accumulation phase. And also see with the volume profile with the overnight session, it is a P. And then we just go long on the pullback, put a stop below, and head for at least a 1 to 5, 1 to 2 risk to reward. Now go to the back. The history, but there is not going to be a very good history, I think, because it's a very strong uptrend. It's so slow. And then check where's the next area of interest, but I think we can go for 1 to 2, 1 to 3 risk to reward because we are an uptrend. We are likely to continue, or we can just stay time-wise in the trade until the US session steps in. So that could be the first trade idea. And if you want to even day trade that more, you can step down to a lower time frame and check for P setups here. So we now had an impulse. Then we established a first P shape. And I would view this as the first P area. We had no breakout to the upside. So we can think about either we can wait for breakout above here, and then scale in above here. Or we are starting to build a range now, as you can see. There's no big interest. We have kind of a weak high here. It's a triple top. It's not a strong sign. For now, we have stronger lows than stronger highs. We are on uptrend, further confirmation to the upside. You can check if there are important news today. Yes, Euro, ECB rate decision, BPI. So there are important news. So if you are in a long trade, I would definitely go exit the long trade before that. But as we have important decisions, the likelihood of a move today is going to be lower. So the likelihood of us establishing or continuing the range that we're starting to form here, which is also visible in the profile, we have a D profile, is high. So we can just check for trades now on the bottom or on the low side. So we will now wait for a P shape to form. And we don't have a P shape here. So first we can wait for a structure shift. We now have a basic downward structure. So we take out this high. We can check for a P setup forming here and then use the setup. Either start the trades when we make a fake out to the bottom and close back in. One trade option. We trade the pullback to the upside. Then we have our long idea, and then we have our setups, and then we combine this with the footprint as further confirmation. But in this case, we are trading the range. We're trading it at least to the range high. But as we are on uptrend and we generally have a long bias, we can extend our risk toward to the upside. And either we wait time-wise until there's the news, or we try to establish a swing trade because, for example, there is a rally at the end of the year statistically that is going to be very high, or the likelihood of that being very high, and we want to confirm or switch this day trading idea to a swing trading idea, and then of course we extend the take profits, or we wait for something like an excess. When we have an uptrend, like in this case, you see high volume, high volume, high volume, and then the volume kind of slows down. You also see down here, then the interest, like I said a lot of times in the course, the interest in this area to trade and market participants to buy or sell is lower. So the likelihood of that area getting rejected is lower. So also when you see down here, see the volume kind of is getting very low. So the likelihood of this area down here, so when you go to the bottoms, it is kind of low to get rejected. So now we have structure shift, and now we can wait just for a P setup, and that's it. And then we have a long setup. But again, now I think I answered one question pretty long. We still have a lot of them open, and I have a call at, let me check my calendar. I think at 12 is the earliest. Yes, I need to leave at 20 minutes.
Michael says, good webinar. That's exactly what we need. So they're appreciating all the examples.
Perfect.
So
We're going to continue with this, as I said, in January, because those are now live examples. But
yes,
it's more live examples than a Q&A now. But that was an example for a P shape, but I think it also showed you that it is not that complex. A lot of people think they don't understand it, but it's really, really simple. So I have not completed the course. Would it be good to have examples in the chart? Then I think at first you should complete the course. Could you please dive deep into business zones topic? Yes, with a Q&A with the elite membership, we dive a lot deeper into the business zones. We are going to provide them for a time and dive deeper into that, but we cannot do this in this general webinar. Question about business zones, we're going to do in another webinar. How to approach days with big events. I think I answered that question already. When you have news like the NFP, the likelihood of the markets going sideways before the news is very high. And then after the news, of course, there's going to be big volatility. When you are in a trade and you are in a profit, the market makers step out of the game before high impact news. I would suggest you to exit the trade, or if you are on swing trade, to take a partial profit. There is no general rule, exit always before trades. You always need to put it in context. There is not A, B, A, B, A, B, because then we can just program the strategy and an algorithm would do it and we don't need to do it. but that's not the case. So if you are in a case like this, we have a long idea, and the long idea now established, we are forming a P shape here. But for me, the liquidity in this case is too low. You see, we have a lot of gaps. For me, this would not be a beautiful setup. Like in the FX I just explained. It depends on the context. If you have an open trade and there's high impact news, the spike to the up and downside is going to be there. So you should exit that trade. In this case, for a swing trade, if you're in a swing trade for 2-3 weeks and there's a high impact news, there are going to be a lot of high impact news. Just stay inside the trade. One more question from me. Sorry, I'm being too greedy. No worries. Do you use options open interest in regards to a level which may hit today? I'm diving deeper into that, but I'm not teaching that yet because I don't have enough experience yet with it. But options are an interesting topic and you can implement it, but I haven't combined it with our strategy yet. I just know that I still need to learn a lot more about options. I have like the basic understanding and their gamma levels and their interesting open interest areas of interest, but it would be overwhelming. And for me, for now, I don't feel qualified enough to already teach it. When this point is reached, maybe at some point in the future, we will implement it, but for now, not. And we're also, for now and in the championship, we haven't used that information.
I'm just going to answer a quick question about the psychology test by Tom. So it's not a psychology test. Alvaro is asking when it will be available, and we will make it available probably before, if not during the live sessions. And Tom will hold a masterclass on how to read it, and the full mindset masterclass will be delivered during the live sessions, or it will be delivered live anyways. So that's everything regarding the mindset masterclass. Also, the live session with Patrick himself, where he will show you examples of his trade, will happen. Most likely, in order to facilitate him explaining it, we will do it in German. Let's see. We'll run some tests, and in case you will receive it fully translated afterwards. But yeah, everything is coming, guys. Don't worry. We're working to provide everything in the next weeks and months as predicted. So we can answer a couple more questions, I think, and then I would probably, guys, if your questions was not answered today, save the question for next week or post it in the Discord. So
that was what I was asking. I mean, there have been some questions in the Discord, but there are way more questions now in the live session. So I think the interest is more here, but the biggest value and answers, and also you can discuss topics in the Discord and I will step in and then correct it. But a lot of the times another member in the Discord gives the exact same answer I would give, sometimes even better. So if not all questions are answered in this one, there is the Discord.
Yes.
So when Jonathan talks about opening value area low zone, are you talking about, yes, most of the times I'm talking about opening of the cash session. But I already explained that in detail a couple of minutes ago. How do you deal with difference of row size? We can see on the screen. Adapt the row size to the one where it is displayed nice. That's one of the biggest difficulties of TradingView. I don't like the auto function, but they're gonna improve it. In SaraChart, you can, or just know it from SaraChart because I used it before, but in a lot of the other softwares, you can adapt it. For example, when you have so the row size is the size of one row on the left or on the TPO. So how many ticks are like one letter or one volume, and we can increase or decrease this. So now the one row is one tick, and then we can increase this. And depending on the volatility, for example, on NASDAQ, it's going to be way higher. So if we go to the NASDAQ, we would need to increase, when we have the volume profile or market profile, we would need to increase the row size. There is no real fixed rule that I use. It's just the way it's convenient and good to analyze. You don't need too much data, but you don't want less enough data. Yeah. Hope that answers. Why you take BADJ back adjusted and not unadjusted? Because we always want to analyze back adjusted charts. It's just it just works better. Volume profiles work great for me so far. Just understand if the ES set 24 example how should I trade it if price is $6,085 and price nice. No, you don't need to pay that price exactly. You don't need a huge portfolio. It depends on the product you trade. If you trade a CFD, you can trade just a small contract or a small size of it. Trade a mini future. There are going to be different margin requirements depending on the broker you trade. So you need to check with your broker, but it's just a margin that you need to trade that. But with CFDs, it's the smallest you can scale it. For Forex futures, you use only the cash session volume profile. No, when I do swing trading in currencies, I use the 24-hour profile, but when I day trade currency futures, then I use the cash session profile most of the times. But for currency futures like the euro, like the pound, so for all the current or Swiss franc, for all the currencies that are also in Europe, I very often use the London Open. So the cash session for the future, for the 6E, for the Euro future on the CME group itself, the cash session open is 14:30. But because the Euro is inside like the currency pair or the Forex pair, I also like to take the London Open into account. What is the true open range every day? You mean the initial balance? The initial balance is like the first hour of the cash session. Australia, Asia. Session starts New York midnight. What does the day start and end to you guys? Depends on the time zone, but when a day starts at the zero at like the first minute of the day, German time for me, then the day starts. So it depends on the time zone you're in when your day starts and when it finishes. I don't understand the question. How do you look for potential take profit targets when the market's at all-time highs? I don't look either. I take a fixed risk to reward ratio, or I will just watch the markets and see if there's exhaustion, if there's the volumes falling down, or there's an excessive move. So you have a very big volume, high volume spike, and then there's no volume in the next candle. This is sometimes an indication of a reversal. So different options, either fixed risk to reward or an excessive move. What are the best assets to trade on Frankfurt Open, London Open that you guys have tested in strategy as well? All of them. You can take the DAX, Euro stocks, you can take FGBL, so bonds, European bonds, Euro futures, pound futures, Swiss franc futures. There are a lot of markets you can trade. All the German stocks. I mean, I'm not doing a lot of example with stocks because I'm not deep into stock trading. We trade stocks, but it's not my special area. But the way of analysis again is the same. But we mainly do swing trading in stocks, so it's less with the opening variance, it's more with mountains and valleys. So we have 5 more minutes. Okay, there's a question in German. Could you send it in English again?
Yes.
That would be perfect, Andreas. Now there is the question in English again. Sorry. I have a question about the volume profile variant 4. In the video, it's explained if the market opens completely outside of the previous day, there would be a gap. How fast would it return to the previous day, 5 or 10 minutes, or can it be 1 hour? There is no fixed time frame on what time frame it will close the gap. Sometimes it will never close the gap. The probability is extremely low according to my research. Open within the previous days, value area 91 to 9% outside of the value area, depending on how fast the return defined. Again, in this case, please screenshot examples and then the text in the Discord, and then I will answer to this. But just with a text, with examples you're referring to, it's going to be difficult. Screenshot text in the Discord, and then I will answer that. When it comes to daily trading, do we always wait to trade until 30 minutes after the opening? No, you can trade in the first minute. You can also trade pre-market minutes after opening of the market cash session to decide where markets want to go. It's an anonymous viewer, and I don't get the question. So please reframe
The question, I can see it, I think. The question was, let me check. When it comes to day trading, yeah, do we always wait to trade until 30 minutes after the opening of the cash session to decide where markets wants to go?
No. You can trade from the first minute. You have a bias for the day. Of course, it can be reversed 30 minutes later. It can also be reversed 10 minutes later or 2 hours later.
I think he might be referring to the initial balance of the market profile, which lasts the first 30 minutes at least. If you want to wait, for the initial balance to understand the potential direction.
No, you don't need to. Hi, Jonathan. I'm currently at the end of series 200. When I will see the real source? If you continue the course in the following series. Our operativity or some examples to trade in CFD Forex. Unfortunately, I'm confident only with Forex. Don't get the question, but you can just, as I explained now, a lot of times analyze the future markets or volume data and then implement it into the Forex or CFD space. Going back to take profits, how strict are you restricting your take profit? My weakness is trying to take partials versus watching profits retrace. If you have a very active trading style, so this is again where the personality test steps into the game, because this is the thing you explain is a typical psychological problem of taking profits too early, not sticking, not holding to trades. For example, Patrick is very good at holding to trades, but there are different personalities that are not good at it. And this is the type where the personality test steps in. And you need to find a strategy that suits you. So if you have a problem with this, you need to adapt the strategy with this. And we're going to dive deeper into that with Tom, with the personality analysis. So, guys,
awesome.
I need to hop on a call.
Yeah, we finished all the questions. So if you guys appreciated this live session, you want to see more, let us know in the Discord, in the feedback session.
Andrea, have you read through the chat? Because I haven't gone through it yet.
I think it was mostly real-time feedbacks, and the questions were fully answered. They appreciate it. Thank you for answering the question. Thank you. Enjoy the holidays. You have the patience of a saint, Jonathan. Blah blah blah. And so some compliments. Thank you very much, guys, and we will see you next week. Let's keep in touch in the Discord. As Jonathan said, if you have specific questions, he's available for you to answer with practical. And if you can send examples of something you haven't understood, he's available in the Discord as well. And soon,
examples, backtests, all things. Share, interact, and train. Although the live sessions are going to start mid-January, you can interact and train before that. And I would suggest you to do it, because you will need to build trust in strategy. And just from copying it, you will have no trust in it.
Correct. And let us know if you appreciated this live session. We're trying to give our best to provide you with extra live session this month after the feedback you've given us. And feel free to give us more feedbacks, text to our team in the WhatsApp, so we can keep improving the product for you and giving you the best educational experience possible. So thank you very much again. Thank you, Jonathan, for your time. And we'll see you guys next week. And
welcome.
have a great day, everyone.
See you. Bye.
Bye-bye.